What's up, guys? In this video, we're going to talk about the five best REIT stocks to buy right now. Give you guys a quick rundown on what a REIT is. A REIT stands for a real estate investment trust, and that's basically a company that owns real estate and they have tenants and they collect income from those tenants. So a lot of different REITs out there for different industries. You have REITs for healthcare, REITs for shopping malls, reach for convenience stores, drug stores, data centers. There's many different types of REITs out there, even storage. For too long didn't read. I'm just going to kind of throw out those my five recommendations right now, and then I'm going to go into each one in depth. My first recommendation is Realty Income. That's probably my favorite overall REIT stock of all time. They're labeled basically the monthly dividend company. My second pick is Simon Property Group, ticker symbol SPG. My third choice is Public Storage, ticker symbol PSA. My fifth choice is American Tower, AMT. And my last choice, ticker symbol AMT. My last choice is Digital Reality, ticker symbol DLR. So as we're looking at I have this on trading view right here. So the reason why I like to use trading views, you can do things like compare stocks and things like that. So as you can see here, this is a look at all of their current prices. So if we kind of look at this year-to-date chart and we kind of look at the percentages, we can see that many of these stocks are on sale. Kind of the one that fell the least amount of money would be actually Digital Reality is up, and so is American Tower, but we have PSA that's down just 5%. uh, Realty Income has been just down 12% year to date, and the biggest loser has been Simon Property Group. So the reason why Simon Property Group is down the most is because they are the largest mall operator in the United States. So obviously, when the malls closed down, that really hurt their business model. But I think this is a great time to buy REITs, and this is kind of a industry that people aren't really talking about. Much of the focus now has obviously been on these fast-flying penny stocks, tech stocks, the Nasdaq's at an all-time high, things like that. Tesla's been doing really well. So the reason why REIT stocks are so good is because most of these companies pay out around 90% of their income through dividends, and this is something that I like to do for my retirement portfolio. Obviously, these stocks aren't going to go up a ton of money, day to day, but I think this is a really good choice for you guys out there that you have like a Roth IRA or a SEP IRA if you're self-employed. Maybe you have some sort of traditional IRA, or you have some sort of retirement plan. I really like these stocks because these dividends can compound over time and they really add up. So I kind of just want to quickly go over why REITs are such a good opportunity right now. So I found a really interesting article on Seeking Alpha. So I just want to blow this up so you guys can read this a little bit easier. So as you can see here, it says we're buying the REIT collapse. So kind of the most important thing about REITs is that they have always historically covered through every collapse. So the article mentions that REITs valuations are at a 10-year low, and it says REITs have never been so cheap based on their yield spreads. The yield spread is basically the dividend yield versus the 10-year treasury yield. So it's definitely a good opportunity if you guys want to earn some dividend income and things like that. And then as we can see here, more people are going back and shopping now, and things are kind of opening up in the United States. The third point is that obviously there could be a second wave, but that's kind of we're really not sure about that one, so let's just skip that one. And it says insiders are loading up like never before. So I did some research and I was checking out Simon Property Group, and in particular because that was the one that was down the most out of the five that I chose. And as you can see here, it is true the CEO David Simon purchased a bunch of shares. He picked up 150,000 shares at $60, and a bunch of other insiders have been buying up Simon Property Group in particular, guys. And the final thing about REITs is that they have a 100% historic recovery rate. Simply the land becomes more valuable as the dollar declines, and as you're seeing now with lots of savings accounts and bank accounts, things like that. Most traditional banks barely pay any interest, and in countries like Japan and Germany and all throughout Europe, a lot of countries have negative interest rates. So I think investing in real estate investment trust is a great hedge for your retirement. Obviously you don't want to have a stock like Tesla in your retirement if you're nearing retirement or you're planning on leaving the workforce, because the volatility will drive you crazy. And if you pick the wrong stock, you might have to head back to work. So you definitely want some kind of quality dividend paying REITs in your retirement portfolio. You can live off of that income when you start working, and you can depend on the consistency. So let's quickly go through each of these stocks, guys. Okay, so I want to kind of keep these videos a bit shorter. Some of them have been running on longer. So you guys can check out all of this information by just going to the investor relations page on each of these websites. But my favorite choice of all in the stock that I've been holding for years is Realty Income. They're called the monthly dividend company, and they've been compounding at 14.6% on average since 1994, and have a compounded annual dividend growth rate of 4.5%, and they pay a monthly dividend. So I really like getting those monthly dividend checks, guys. They have a dividend yield of around 4%, and they've been paying consecutively for 598 dividends in a row, and they've raised their dividend for 107th monthly dividend increases, guys, ever since they've been public in 1994. So this is one of the safer ones out there. They have a pretty stable portfolio. They deal mostly with things like convenience stores and things like that. So I just want to show you guys their top 20 tenants really quickly. Okay, so they basically deal with drugstores and convenience stores. So these are some of the most obviously recession-proof businesses out there, because people are going to continue to buy medicine, they're continue to buy food, in case of a crisis situation. So obviously some of the tenants down here got hit really hard, like AMC Theaters, LA Fitness. So the gyms and the things like that, those people are obviously have been hit really hard by the crisis, but the majority of their portfolio, I would say the top revenue generators, should easily be able to pay their leases. And a lot of these companies, a lot of these REITs, guys, have liquidity for years, so they're not like the airline stocks or the cruise stocks that are having to scramble for bailouts and things like that. A company like Realty Income has a pretty strong balance sheet, so I'm going to show you guys that. Okay, so I'm at their latest quarterly report, and as you can see here, the company did a great job of raising capital. They actually came out pretty well. They raised $752 million from the sale of common stock at around $77. So that actually worked out for them pretty well, considering the stock is trading around $63. And that helped add a lot of liquidity. And then they also have a $3 billion revolving credit that is expiring in 2023, guys. So they have plenty of money saved up. They should be pretty good. They have a pretty big cash position. As you can see, they increased their cash position to $1.2 billion. And with things opening back up, they should be just fine. They've been collecting, they've been working to collect as much of their rents as possible. So obviously some of the people, like for example, AMC Theaters and companies like that, have been struggling a bit. But as you can see here, they've collected 82% of the contractual rent for April 2020 from their top 20 tenants. So pretty good, and things should get better, obviously, as things open back up and more people spend money. Okay, so Okay, guys, so the second stock is Simon Property Group. So just go back to the chart to give you guys a kind of where this stock is. It's trading at around $75 now, and this stock has been the one that's been hit the most, down 47% year to date. And this was the stock that I mentioned. There was a lot of insider buying by a lot of insiders on this stock, because this is a mall operator. So mall operators got absolutely crushed during this, situation, simply because they had to close down their malls that weren't generating any revenue. Their tenants weren't making any money. So as you can see here, they're the largest in the United States, and they have properties across North America, Europe, and Asia. So the stock has rebounded a bit, and I'm going to give you guys kind of an insight on where the company is based on their latest release. Okay, so Simon Property Group was probably hit the worst from this whole situation, but the good thing is that they did reopen their malls back on May 11th, and as you can see here, they took a lot of kind of stances to limit the blow of this. So they reduced all non-essential corporate spending, reduced property expenses, eliminated $1 billion worth of new development projects. So they were probably looking to expand before this whole situation happened, and they just kind of stopped that. They drew on their 3.75 billion credit line as well, and like I said, they reopened 77 of their U.S. retail properties back in May 11th, so that's definitely a good sign. And they have plenty of liquidity. They have around $8.7 billion, including $4.1 billion cash on hand, guys. And the good thing about this stock is that this was one of the stocks that I would say, They did not suspend their dividend, so the dividend is payable. I believe the dividend X date is, I believe it's June. Okay, it's June 17th. Yeah, so it's actually the same day that I'm publishing this video, guys. So if you guys buy it today, I think you'll be eligible for the dividend. But this is definitely a long-term play, and the mall stocks have been crushed over the last couple of years due to, I think, things like Amazon and stuff like that. But if you guys are in a really long-term value, I think Simon Property Group is an excellent company. Okay, so the next stock is PSA Public Storage, guys. So this is actually the number one storage facility owner in the. It's actually the number one in the entire world, but it's one of the biggest one in United States. You've probably seen this, guys. If you live in any major city, you've probably seen their storage facilities in your neighborhood. So as you can see here, they have around 2,500 facilities across the United States with more than 1 million customers, and they're members of the S&P 500. So the stock is currently trading just under $200. So if we take a look at their latest quarterly release, I can blow this up so you guys can see this better. Okay, as you can see here, this was another one of the companies that basically, took some measures to basically stay afloat during these times. So this is their first quarter release, and as you can see here, guys, I'm going to go down and show you what they've been doing. Okay, so see how they've been impacted, as you can see here, over this whole situation. It says they've seen since March, late March, they've seen a significant reduction in demand for self-storage space. As a result, our move-in volumes, despite lower move-in rental rates, have also declined significantly. So obviously, this company's been hit. People just aren't moving out if they're not as active and moving around as much. But the good thing is that with kind of things lifted, we should see a good rebound in people storing things. So as you can see here, this is another company that's continuing to pay their dividend. Actually, they just paid their record date, so you guys can miss that dividend if you just seen this one. But this is another stable REIT stock that I think has been beaten down too much, and there's a lot of quality here as well. And people are always going to need to store things, so I think this is a pretty solid bet. And I'll be looking forward to their next quarterly report to give you guys kind of a more accurate on the numbers, because the numbers were obviously not as great considering the circumstances. Okay, so the fourth stock is AMT, ticker symbol AMT, and that's American Tower, guys. So this stock is actually the most expensive stock in terms of price on the entire list. As you can see here, American Tower is one of the largest REITs in the world. They basically own communication sites and things like that. So a lot of they have a huge global presence. As you can see here, with over 180,000 communication sites, 41,000 in the States, and over 139,000 worldwide, guys. So this is a pretty safe stock, I would say. You've probably seen their communication towers if you live in basically any major city. Most likely American Tower is behind that. So let's kind of take it how they've been responding to. Okay, so this is their latest quarterly report, guys. So obviously, this company had a pretty solid beginning until the challenges that kind of came with the whole situation and that people are still dealing with right now. But the good thing is about this company is that this company wasn't hit nearly as much, I don't think, because communication was one of the things that people really needed during the whole global situation. So this isn't like storage where people aren't storing things, or malls where people aren't shopping. So this was one of the reasons why this REIT actually performed decently. As you can see here, this REIT was actually up 15% year to date, and that it makes sense simply looking at these numbers. These numbers are pretty outstanding considering the situation. And communication is definitely something that people are going to need, no matter what happens. So this was kind of a recession-proof REIT, and I really like this REIT because they pay a decent dividend as well, and they actually were repurchasing shares. They repurchased 213,000 shares of common stock. So they're doing a really good job, I think, returning value to investors, guys, and the company just continues to grow, and it's just one of the more stable REITs out there. So you guys be sure to check this one out. It's a really solid company. Okay, so the last stock the last REIT stock that I like here is Digital Reality, ticker symbol DLR. So this stock is trading at around $142, and it's actually the biggest winner year to date on the entire list, up 20%. And they are basically a REIT for data centers, guys. So they've been increasing their dividends for years. It's one of the biggest publicly traded REITs in the United States. And like I said, it's another stock. It's another REIT stock that is pretty recession proof. People are always going to data centers and things like communication stocks did really well during this situation simply because these are things that people always need. Okay, and the company in the first quarter, they had a nice 5% increase from the previous quarter and 1% from the same year last year. So this is another reason why the stock has gone up. They've basically been able to maintain their funds from operations outlook. That's basically the metric that people use for REITs. And this is another pretty safe stock, I would say. Despite the challenging environment, the CEO said they continue to execute on a strategic plan. So basically, guys, this is another one. I think digital reality. It's a little bit expensive, but very safe REIT stock. And of course, guys, this stock it pays a dividend. They didn't mention the quarter. They didn't mention. I couldn't find the dividend in the earnings release, but the dividend yield is currently 3.21%, guys. So I hope this gives you guys an overview on all of these stocks. I think all these stocks are undervalued and great long-term holds. So for me, my favorite stock is Realty Income. I just love the monthly dividend stock. But if I were have to rank them, I would probably say for me personally, I would say the number one buy would just be Realty Income simply because monthly dividends compound faster than quarterly dividends do. So, if you're getting a monthly check versus a quarterly check, you're getting 12 checks a year versus 4 checks, and with compound interest, getting more frequent payments will allow your money to grow faster. My second choice would probably be American Tower. I just like the consistency of the company and the fact that we're always going to need communications. Coming in third, I think I like digital reality. Data centers are very important for the future as we move towards 5G and cloud centers and things like that. People are always going to need lots and lots of data. My fourth choice would be PSA. I think PSA, people are obviously going to need to store things even though people aren't consuming as much. I think PSA is a good choice. And fifth would be Simon Property Group. And the reason I don't like Simon Property Group is matters because I think Amazon and I think e-commerce is changing the retail landscape, and I think people are going to be spending fewer time in malls. So that one is probably has the most risk. But I think people still like the shopping experience. So that's another buy as well. So I hope you enjoyed this video, guys. Please give me a thumbs up and subscribe to my channel for more content on REIT stocks and things like that. So I hope you enjoyed this video, guys. So until next time, take care.